A lot of people think they are bad at investing. Usually they are not. Usually they were just taught bad ideas. And those bad ideas are expensive. Because investing is one of the few things that can quietly change your life over time. But only if you actually start. And a lot of people never start because they believe myths that sound smart, but keep them stuck. So in this video, I want to break down 10 investing myths you may still believe. Not in a technical way, in a useful way. Because most people do not need more investing jargon, they need fewer lies. Let's start with one of the biggest ones. Myth 1. You need a lot of money to start investing. This myth has delayed millions of people. They think investing is only for people with spare cash, high income, or rich parents. So they wait. They tell themselves they will start later. Later when they earn more. Later when life is calmer. Later when they have enough. And for a lot of people, later never comes. That is the trap. Because starting small is still starting. And in investing, the habit matters more than the perfect amount at the beginning. If you can invest a small amount consistently, you are already building the behavior that matters most. This myth sounds practical, but it is really procrastination dressed up as logic. Myth 2. Investing is basically gambling. This one scares a lot of people. They see prices move. They hear stories about crashes. They see people lose money doing reckless things. And then they decide all investing is just gambling. It is not. Gambling is short-term risk with odds tilted against you. Investing, done properly, is long-term ownership. That is a huge difference. If you are buying random hype, chasing hot tips, or treating the market like a casino, then yes, you are acting like a gambler. But that is not the same as disciplined investing. Real investing is not about thrills. It is about patience, consistency, and letting time do heavy lifting. The problem is not investing. The problem is reckless behavior wearing investing clothes. Myth 3. You need to be an expert before you begin. This myth sounds responsible. That is why it fools people. They think, I should learn everything first. So they keep researching, keep watching videos, keep reading threads, keep comparing opinions, and never actually put money to work. Now obviously, learning matters. But you do not need a finance degree to begin building a simple investing habit. A lot of people hide behind overlearning because action feels uncomfortable. They want total confidence before taking the first step. That is not how this works. You learn some things before you start, then you learn more while you keep going. That is normal. Waiting until you feel like an expert is usually just another way of staying out. Myth 4. Once the market feels safer, then I'll invest. This one sounds sensible. But it causes a lot of damage. Because people want to invest after uncertainty disappears. The problem is that markets move before comfort returns. By the time things feel safe again, prices have often already moved, and then the same person who waited says, I missed it. That is why trying to wait for perfect conditions often leads nowhere. There is always something happening. Always uncertainty. Always a reason to delay. That is why consistency beats perfect timing for most people. The goal is not to be fearless. The goal is to build a system that works even when the world feels noisy. Myth 5. Investing is only for older people. This myth hurts younger people badly because it makes them treat time like it does not matter yet. They think investing is something for their 30s or 40s or once life settles down. But time is one of the biggest advantages an investor can have. The earlier you start, the less pressure you need to apply later. That matters a lot, because money that has more time to grow behaves very differently from money started late in panic mode. The younger you are, the less your early investing needs to impress anyone. It just needs to begin. And honestly, older people get hit by this myth too. Some think they started too late, so they should not bother at all. That is also a mistake. Too early is good. Too late is still better than never. Myth 6. You need to pick winning stocks to build wealth. This myth makes investing look harder than it needs to be. People think real investors are always finding the next big stock, the next explosion, the next hidden winner. And because they do not know how to do that, they avoid investing altogether. But building wealth does not require becoming a stock-picking genius. In fact, A lot of people would do better if they stopped trying to be one. This myth feeds ego. It feeds excitement. It feeds the fantasy of getting rich through one brilliant pick. But that fantasy often distracts people from the more boring paths that actually work well over time. Slow and diversified may not sound sexy, but it has built a lot more real wealth than dramatic guessing. Myth 7. If the market drops, it means investing was a mistake. This myth destroys people during normal market pain. They start investing, the market drops, and suddenly they think the whole thing failed. No. A drop does not automatically mean the plan was wrong. It may just mean markets are doing what markets do. People say they want long-term returns, but then they panic the moment short-term pain shows up. That is the contradiction. Investing is one of those areas where people love the reward in theory, but hate the process in practice. And the process includes volatility. Not every day, not forever, but sometimes. That does not mean you celebrate losses. It means you understand that movement is part of the path, not proof that the path is broken. Myth 8. I'll start investing after I fix every part of my finances. This one sounds disciplined, but it often becomes another delay tactic. Now, if your finances are total chaos, yes, you may need to fix urgent issues first. But many people use, "I'm not fully ready yet," as an excuse for years. They think everything must be perfect before investing can begin. Perfect budget, perfect emergency fund, perfect debt situation, perfect income, perfect confidence. That kind of perfection does not exist. A lot of financial progress overlaps. You can clean up your money while learning to invest. You can improve your habits while building a small investing rhythm. You do not need a perfect life to start doing something useful. You need enough structure to start sensibly. That is different. Myth 9. More complexity means better investing. A lot of people get impressed by complexity. The fancy terms, the complicated strategies, the constant market commentary, the person who sounds like they know everything. But complexity is not the same as quality. And for most people, complexity becomes friction. More friction usually means less consistency. And less consistency usually means weaker results. A simple investing system you actually follow is worth far more than a complex one you keep abandoning. People love to underestimate simplicity because it feels too plain. But simple does not mean weak. Simple often means repeatable. And repeatable is powerful. Myth 10. Investing will make me rich quickly. This myth might be the most dangerous one of all, because it sets people up to be disappointed by reality. Real investing is usually not fast enough for impatient people. That is why so many people get pulled into hype, speculation, and risky nonsense. They do not really want to invest. They want speed. And speed makes people vulnerable. Because the promise of quick wealth shuts down good judgment. Now, to be clear, investing can absolutely build serious wealth, but usually over time. Usually through patience. Usually through repetition. Usually through staying in the game long enough for compounding to matter. That is not glamorous, but it is real. And real beats exciting when your goal is actual wealth. So what should you believe instead? Here is the better framework. You do not need a lot of money to start. You do not need perfect timing. You do not need expert-level knowledge before your first step. You do not need to outsmart everyone, and you do not need investing to feel thrilling. What you do need is this: a simple plan, a long-term mindset, a basic understanding of what you are doing, and enough discipline to keep going when it feels boring. That is the part people keep missing. Boring is not bad in investing. Boring is often where the real money is built. That is why myths are so dangerous. They keep people waiting for the wrong things. More money, more certainty, more confidence, more clarity, more perfect conditions. Meanwhile, time keeps moving, and time is one of the biggest assets an investor has. Here is the main takeaway. Most people are not held back by lack of access to investing. They are held back by bad beliefs about investing, and bad beliefs create expensive delays. So if you want to build wealth, start by unlearning the myths that keep you passive, because once those myths lose their grip, investing starts looking less like something mysterious and more like something normal people can do consistently, and that is exactly what it should be. Now watch the next video, which is titled, Are you actually rich or poor?